the recent Hamas attack on Israel and what it could mean for the global economy and for crypto investors. First, let's get a quick overview of the situation. On October 10th, 2023, Hamas, a Palestinian militant group, launched a surprise attack on Israel. The Israeli Prime Minister has since declared war. It's still too early to say whether or not this will escalate into a full-blown international conflict, but it's definitely something to be aware of. If this war does escalate, it's likely to have a significant impact on the global economy. One of the most immediate concerns is inflation. Governments around the world are already struggling to control inflation, and a war would only make things worse. This is because wars are expensive and governments typically finance them by printing money. When there's more money in circulation, the value of each individual dollar decreases, which leads to inflation. Another concern is energy prices. The Middle East is a major producer of oil and gas, and a war in the region could disrupt supplies. This could lead to higher energy prices, which would also contribute to inflation. In addition to inflation, a war in the Middle East could also lead to capital controls. Capital controls are restrictions that governments impose on the movement of money. Governments may implement capital controls to prevent their currencies from fleeing the country. This could make it difficult for investors to withdraw their money from foreign markets. Implications for crypto investors. So, what does all of this mean for crypto investors? Well, there are a few things to keep in mind. First, it's important to be aware of the potential for inflation. If inflation does increase, it could hurt the value of your crypto investments. However, it's also important to remember that cryptocurrencies are often seen as a hedge against inflation. So, while your crypto investments may lose value in nominal terms, they may still retain their value in real terms. Second, you need to be aware of the potential for capital controls. If governments do implement capital controls, it could make it difficult for you to withdraw your crypto investments from foreign exchanges. However, it's important to remember that cryptocurrencies are decentralized. This means that they are not subject to the same kind of government control as traditional fiat currencies. Finally, you need to be aware of the potential for increased volatility. A war in the Middle East would likely lead to increased volatility in the global markets. This means that the price of cryptocurrencies could fluctuate more wildly than usual. So, what should you do as a crypto investor in light of all of this? Here are a few tips. Diversify your portfolio. Don't put all of your eggs in one basket. Spread your investments across a variety of different cryptocurrencies and other assets. Have a plan in place. Decide what you're going to do if inflation increases, if capital controls are implemented, or if volatility increases. Stay informed. Keep up with the latest news and developments in the global economy and in the crypto markets. Thanks for watching. If you enjoyed this video, please give it a thumbs up and subscribe to the PIL3T Crypto channel for more crypto content.